All right, guys. So today, what we'll cover is just simply how to spot a market maker buy sell program. And honestly, as an ICT trader, digging into buy and sell programs and really enhancing your understanding and perception around buy and sell programs is probably the single most important thing you can do. And so here's a little motto: is before you trade concepts, learn the code that the market is running on. Many traders open up charts, ICT traders specifically, both new and old or seasoned, and we go straight to ICT concepts, right? We're looking for a fair value gap, a liquidity sweep. And when you do this, right, your understanding about price and the overall narrative is very fragmented. All right. So instead, you want to learn the code that the market is running on because we should view the buy and sell program as the market's overall operating system, whereas the concepts themselves are just applications that are running on top of that operating system. All right. So a few examples of how traders fail or where it creates the biggest misconception is you might have a scenario where a trader trades an imbalance, right? Without understanding the program. What I mean by that is let's imagine this is parent order flow, right? And price is coming down to this level, and this is a higher time frame parent order flow inefficiency. All right. And let's say that from here to here, the markets have been bearish the entire time. Okay. Now, without understanding the market's overall operating system, this trader is going to be subject to seeing a scenario down here, right? And he's going to be in a continued bearish state of mind. All right. So the first time that he sees this move, and this move, excuse me, he's going to be prepared to trade this fair value gap, right? Because he believes the market should continue to go short. But if you were to zoom out and understand that, hey, right now we're on the buy side of a curve, price has reached a higher time frame parent order flow rate, right? Then he'd be using that fair value gap to his advantage to collect information because if price creates an inversion fair value gap here after reacting to the more parent order flow fair value gap, then he'd be able to position himself on the right side of the market, which is this way, attacking this low resistant liquidity run here, right? A few other examples, just entering the model in the wrong phase. You might think the trend is bullish, right? In this case, we think the trend is bearish, right? But it's a sell program and accumulation, so on and so forth, and confuses retracements with reversals. Okay. And so it really pays to know where we are and to view price first from the lens of buy and sell programs. Before we go into the rest of the teaching, a few keynotes to jot down, right? Obviously, we all know it. Markets don't move because of retail sentiment. They move because of liquidity engineering and rebalancing. Buy and sell programs exist to facilitate accumulation, distribution, and delivery, or we can say expansion. All right. And the last point, which is probably most important, understanding the program lets you anticipate delivery before any ICT entry model or concept even becomes relevant. All right. And I always like to use this example. This schematic, which is kind of like ICT's 2022 YouTube model, and we just saw it in the previous example above. This would be what we call lower time frame context. This could be right and wrong, right? You could utilize this on the, if you were to utilize this on the buy side of the curve, right, wanting to go short into a higher time frame array, right? Let's say we've already engaged with the array, right? Then you'd be wrong. Well, take the same schematic, and if you were using this schematic and we were on the overall sell side of the curve, right, meaning price is here, stops inefficiency, we come back inside of the range. Now, you're right, right? So it pays to know where you are in terms of the overall operating system, okay? So the operating system, we the market maker programs, the applications, OTE, fair value gap, the buy side imbalance, sell side imbalance, the liquidity pools, breakers, and all that good stuff. All right. So just a quick little phrase: don't mark the imbalance first. All right. Ask yourself, what program is the algorithm delivering? Okay, so in terms of spotting a buy and sell program, okay, in simple terms, or the simplest way to do this rather, is when you see a market that is moving in one set direction, right? We all know that price trades from stops to inefficiency, stops, right? We took out stops here, back down to inefficiency. We take out stops, back down to inefficiency. We take out stops, back down to inefficiency, right? Every move from point A to point B, right, sets the stage for a buy program. Point A to point B, right? Because we know that if the market is bullish, there's a very high chance that point C extends beyond point A, right? Which subsequently becomes point A in the future, B, C, right? Now, whenever we see these pullbacks, right, or these internal range runs, right, this is where we should be zooming into lower time frames and identifying the different phases. Now, within this series, I will go through the different phases, but for the sake of this video, we're only focused on spotting the market maker model and understanding why it's even important. All right. So let's take this for example again, right? Obviously, this is the buy side of the curve, right? This is the sell side of the curve. All right. Now we should all know that at some point in time, price has run into some type of higher time frame array. Let's just say higher time frame fair value gap. All right. And it doesn't matter. This could be a daily fair value gap looking at a 1 hour chart. This could be a 15-minute fair value gap looking at a 5-minute chart here. Right. Whereas maybe we scale down into the 1 minute to see what's happening inside. Right. If this were daily, if this were 1 hour, maybe we scale down to 15 minutes to see what's happening inside. So what you guys should understand is that each one of these pullbacks, right, will create a lower time frame sell side of the curve, buy side of the curve, right? Transitions back over to sell side of the curve, right? Buy side of the curve, right? Whereas the buy side is going to be more extended, at least up until we run into, and I always like to use Newton's laws of physics or motion, which says that if an object that moves in one direction, right, is going to continue in that direction until met with a much higher, stronger force. So when I say parent order flow or parent array, I'm speaking about that higher, stronger force, right? There's a very high likelihood that this array forces price to change its state of delivery. All right, which is another conversation as well. Okay, so these are many buy and sell programs that are a part of an overall sell program, right? But here's where it becomes very unique, because even though we're seeing this as a sell program in itself, if we scan over here, right, we're using the same schematic. What happens is this guy, right, once it transitions, right, if we were to zoom into here, you're going to see the same makeup. Right? So all of these points in which price trades, we get to the top of that array, we see a failure swing, right? It expands lower. Let's say there's some sponsorship inside of here. Prices created those fair value gaps. We have a bearish order block now because this is going to be buy side delivery. 9 times out of 10, this is what this is going to look like, right? You have those candles here. Maybe there's a wick on those candles, right? And then this delivery creates this type of scenario, right? Let's say the up close candle here. And then we have here, 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 right? Right, we're seeing price shift over, okay? Now, if you continue to pay attention to the candles, you'll start to see that the up close candles are now supporting the direction of price, right? Not to be confused with support and resistance. I'm just speaking about the direction of price. Every time we trade up into the more parent array, which is the up close candles or the bearish order blocks, what we're seeing is we're seeing price transition away from those levels. Now, in the lower time frame, we would be looking at more intricate details of price action, right? So in the lower time frame, we'd be zoomed in to here, and we'd be seeing those same things take place. Okay, but here's what's more important. We'd have to first understand that, hey, price has just run into that higher time frame array, right? Which is forcing it to go through a transitional period or change in the state of delivery, right? Which has gotten us on the sell side of the curve. Now I know that, hey, these higher time frames, let's actually use time frames for example. Let's say that the array here is a daily array. All right. Let's say that this movement is the 4-hour chart. All right. So we had a 4-hour fair value gap. And let's say that price, once it expanded lower, it created a 4-hour fair value gap here. Okay. Now we've just saw price trade taking out those stops, right? Once we take out stops, price will tend to reprice back to an inefficiency. Once we rebalance the range, right, we'll seek out those counterparty liquidity pools at these sell stops here, right? And then so on and so forth. Here's another fair value gap down inside of here. Okay. And then so what would happen is we'd be zoomed into here, right? So once again, this is daily, this is 4-hour. And let's say that on a lower time frame, let's say these are 1-hour, smaller 1-hour programs. Okay. And then so what we were seeing a while ago when I was drawing the up close candles and the down close candles, we were just seeing the delivery on that 4-hour chart where it was creating those scenarios where we were seeing the up close candle support price, right? So every time we ran and we retested the delivery from these up close candles, it forces expansions lower. I'm sorry. All right. So just once again, what we be doing is we be zooming inside of here. Now, this is where now I can come to a chart. Okay. Now that I understand where I am on this, now I'm on the sell side of a curve. So we've gone from here, from that array, we've transitioned, we've got sell side sponsorship in the market. Now I can go and start looking for ICT concepts, right? I can come inside of here, and let's say if this is that sell side array or that sell side imbalance, I'm sorry. Now I can come in here and let's say that this is the weekly opening price, right? Now we're going to just kind of place more lipstick on the chart. But let's say this is the weekly opening price, okay? And Monday is here, right? Monday close is here. Well, now it makes sense for me to look for that Judas swing and for me to, instead of seeing, just give you guys a scenario here. Let's say that there's an imbalance created right in this price action, all right? If I did not understand where I was on the chart, I might see this as a liquidity sweep, expansion, and I might be looking to buy this fair value gap, all right? But if I understand the market's operating system and I know that I'm on the sell side of the curve and I know all the different chain reactions that has got me to this point, well, now what I'm going to do is I'm going to use that inefficiency just to collect information. I don't want to trade that inefficiency. I want to see that price no longer cares about buy side imbalances. I'm now looking for time frame alignment, right? Daily chart bearish, 4-hour is bearish. Now I'm in the lower time frame. I'm looking for that 1-hour or 15-minute to also start aligning with bearish characteristics, right? What are bearish characteristics? Right? Creating inversion fair value gaps, right? Turning those busies or those buy side imbalances into bearish fair value gaps, right? And maybe this is that Judas swing, midnight opening price. We have the London Judas into the array. There's that expansion lower. Maybe this is all the New York OTE, so on and so forth. Now it just makes so much sense, right? And maybe to frame things better and position myself on the right side of the market. All right. So I'll just go into just a couple examples, right? For the sake of this supposed to be a mini teaching. Just spotting buy and sell programs. I'm not going to go into every single phase for this particular video, right? All right, so you guys can see here at one point in time, price, uh, we traded higher, buy side of the curve, then we transitioned to sell side of the curve. Right now, we've transitioned to the buy side of the curve. I'll show you guys on a weekly chart. First, what you'll see is the weekly down close candles. You see these guys are supporting price, right? They're supporting the direction of price, right? So we leave out of this, we have an expansion. This is a pullback, all right? So we go stops down into what? Potentially an inefficiency on a daily time frame, okay? Let's go to a daily time frame and see, all right? So we ran out stops, we come down to rebalance the inefficiency. That movement creates that point A to point B, right? Down into the buy side array. So now what I have to do as a trader is go inside of this, and then I want to really frame out the buy and sell programs from there. So I can go to a 4-hour chart, I can go to a 1-hour chart, it doesn't matter. This is also a buy program within a buy program within a buy program, if that makes sense. All right, so this would have been the daily fair value gap, these areas down in here. We can see that on the sell side of the curve, you guys can see the up close candles. Let me give you a 4-hour view. You can see the up close candles are supporting the direction of price, right? As price makes it down into the array. Now, here's what's important. If I didn't understand that, right, I'd be looking for this sell side imbalance to continue to send price lower. All right. But because we understand the overall framework, we understand the market's operating system, we know that hey, we've engaged with the higher time frame discount array, right? We starting to create inversion fair value gaps from the sell side imbalances, which at one point in time used to be respected, right? And now we're creating buy side imbalances. So we're beginning to see price change its state of delivery. All right. And then here we start to, we get into the phases and so on and so forth. You guys can see buy side imbalances are respected. This was an execution that we took this week, just understanding that, hey, we created equal highs, price ran back lower into a just missed the fair value gap. All right, but this could be a case of just different market fees. I don't know. But nonetheless, this is a pullback, right? Then essentially it's a lower time frame buy program. Right. So we went to our lower time frame and we identified a buy program, the same schematics, right? Utilizing this sell side imbalance to our advantage to see that become an inversion fair value gap, and then getting more detail with the true changes in the state of delivery and so on and so forth. All right. That is one example. I want to say probably another clear example that we can take a look at. This is Euro USD. Let's go to a daily chart here. And we've been calling this, I think this is 141, 140 level. But you guys can see a clear sell program here as we trade up. We take out this high, right? And this level down here is a quarterly inefficiency, right? These up close candles are supporting the direction of price. So it pays for us to know that, hey, we've just run into a buy side, a sell side inefficiency, right? These sell side inefficiencies are in control. So that means that I should see this move from point A to point B, right? As buy side of the curve, once we engage with that higher, much stronger force, I should be looking for the lower time frames to align, right, with this daily. So I should be looking for 4-hour, 1 hour, 15 minutes to start aligning with that daily time frame. All right, so let's try to dive inside of here. Dive inside of here and let's just look and see. So all right, perfect. All right, so it's at this point, right, where we no longer want to fail or fall victim to any type of beautiful, bullish types of schematics or scenarios. Why? Because we be buying right into a higher time frame sell side imbalance in a market where the higher time frame sell side imbalances are controlling the direction of price. All right. So even if we saw, this liquidity sweep here and here, and even if it came back, we wouldn't necessarily want to buy this. What we'd be doing is we'd be looking at these sell side imbalances, these buy side imbalances, and we start using these to our advantage. The moment we take out these liquidity pools and we start to negate these inefficiencies and turn them into inversion fair value gaps, we start using that to our advantage, right? So that is the end of this particular teaching, guys. Obviously, there are more in-depth teaching in terms of our community calls, boot camps, and things of that sort. But this will be a little series on buy and sell programs because no matter what ICT model you trade, no matter what concept you trade, every time you take a trade, you are engaged in the middle of a buy and sell program. You just might not understand what phase you're in, right? But this is always, always, always going to be the market's operating system. It doesn't matter what you trade, rather you're trading here, 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 smart money universal, here, here, or here. You're always playing some part in a buy or sell program. So you might as well, um, equip yourself to really being able to spot where you are um, in the market at any given time. All right. Hope you guys enjoyed this, and I look forward to bringing you the next recording.